everyone. My name is Mark Reichman. I'm a senior research analyst with Noble, and it's my pleasure to introduce Mr. Kieran Patankar, who's the President, Chief Executive Officer, and a Director of Maple Gold Mines Limited. And following the presentation, we'll have about 10 to 15 minutes of Q&A.
Thanks, Mark. Appreciate it. Good morning, everyone. As Mark said, I'm Kieran Patankar, President, CEO, and a Director of Maple Gold Mines. It's a pleasure to be back here at NobleCon after a couple of years of other activities keeping us away, but lovely to speak with you today, and excited to talk to you about what Maple Gold is and what we're up to. Let's get started. Just before we get going, obviously this is a forward-looking statements disclaimer. We will be making forward-looking statements during the course of today's presentation. Let's talk a little bit about junior gold mining for a second, and why, as you're looking at the junior mining sector, you should have a scorecard, right? There's a lot of junior mining companies out there. The gold market has been on a tear. Gold prices are up in the $2,600, $2,700 range in price levels that we haven't seen in a number of years. So what is it about junior companies that have sort of lagged the performance of the gold price itself? Well, a lot of them have challenged projects, challenging jurisdictions. It's not getting any easier to find gold. So when you're looking for gold investment opportunities, particularly in the junior sector, there is a scorecard, right? It starts with jurisdiction. Maple Gold is located in Quebec. We're right in the Abitibi. We're in the heart of gold producing region. It's elephant country. There's over 200 million ounces of gold that's been produced out of this region historically, with a lot more to find. The next scorecard item is, does the project have district scale potential? Every major company in the world that's looking for a development or a cornerstone asset that's going to fill their growth pipeline for the next 20 or 30 years is looking for something that's not just an economic, 500,000 to 1 million ounces of production, 50,000 ounces a year, 100,000 ounces a year. They're looking for things that actually move the needle from a production standpoint. Maple Gold has a 400 square kilometer land package that straddles one of the principal gold-bearing structures in the Abitibi. On that 400 square kilometer land position, we control, this is the other element of the scorecard, we control an established gold mineral resource that's multi-million ounces. It's 3 million ounces currently and growing. So it's not just moose pasture here. There's known gold on the ground. It's a district scale property with blue sky exploration potential, but it's already got an established resource, and that resource was completed. It's a 43-101 compliant resource that was done in 2022 between us and our partner, Agnico Eagle. So it's been vetted not only technically, but also by a senior producer. The other thing on our land package that we have is a past-producing high-grade mine complex. It's called Jutel. It was contributed by Agnico Eagle, our strategic partner, at one point a joint venture partner, and it contains a past-producing mine complex that was Agnico's first gold mine. Everyone knows Agnico today is a 56 billion market cap company, but their very first gold mine, the reason why they're called Agnico Eagle, is the Eagle mine, which was part of this Jutel mine complex that produced 1 million ounces at 6.5 grams between 1973 and 1994. And never saw a exploration drill hole since gold price was sitting in the $300 range, right? And then again, blue sky potential. So we've got the land package. Now, what do we also have? What's the advantage of working in Quebec? Well, we're located right off of a major highway. You've heard of junior companies, you've seen some major discoveries, and you've seen share prices run on companies that have excellent discoveries, some of them located in Yukon, some of them located in Mali and sub-Saharan Africa. Will those projects ever become mines? I don't know. You tell me. In the middle of Yukon, they need a lot of infrastructure. In Mali, you don't even know if you've got secure title, right? You got a coup every other week. In Quebec, you've got a supported government, and you've got, in our case, you've got a project that's located right off of a major highway. Highway 109 runs directly north from Rouyn-Noranda. It's a 2.5-hour drive from a major airport serviced by Air Canada. You're all welcome to come up. We're just about to get started drilling, but that's a huge advantage for us. We have a 46-person camp at site. We're connected to grid power, which is hydropower in Quebec, which is cheap. So if and when we discover and build this from 3 million ounces to 5 million and up, it's got ready-made infrastructure, a stable jurisdiction, and a labor force that's ready to go. Our value-oriented and data-driven exploration approach is something I'm going to talk about, but I'm a geological engineer by training. Okay, I've done a lot of things in my career, but I did start out as a rock guy. I won't bore you with rocks today, but you need to follow good process in order to make a major discovery. You can't just drill holes in the ground. This is a complex system. It's a complex deposit. If it were easy, everyone would be doing it. We've fundamentally rejigged and re-altered. We've changed the team. We've come up with a better strategy. We have better technical alignment with our partner than we've had in the 4-year history of our joint venture. And lastly, on the scorecard, validation from a major. Okay, validation for the market is great, but validation from a company that's actually producing gold and producing at a clip like Agnico Eagle. They're now the largest mining company in Canada. They're a $56 billion market cap and growing. And they're the third or second largest gold miner in the world with excellent free cash flow margins, right? They need growth assets. They've already vetted this. They've done their due diligence. They're a strong strategic partner of Maple Gold. What have we done over the course of last year? I took the reins as CEO almost exactly a year ago on November 17th. It's been a year of transformation for Maple Gold. We are set up for success. The company had some missteps. Some of these were unforced errors. Some of this is general market malaise. But what did I do since I came in? Obviously, I spent a lot of time on the ground as an engineer, as a geologist, understanding the people, the projects, the partnership. We took 6-7 months working with our partner to renegotiate a company-friendly transaction that gave us 100% ownership of the deposit, right? That basically brought an additional 1.5 million ounces into our inventory without actually spending any cash to acquire it. If you think about what it would have taken to discover an additional 1.5 million ounces, or how much you would have to pay in cash to acquire 1.5 million ounces in today's market in this jurisdiction, it's significant. We negotiated a company-friendly transaction where we didn't give anything up other than an NSR and a back-end right to our partner. We also raised a significant amount of capital over the last 4 months. We have run room for the next 12 to 18 months. So everything we're going to talk about that we're going to be doing is fully funded organic growth. And that's $10 million of strategic and institutional money, right? This is sticky money. This is strong backing from not only our partner, but also institutions in Canada and globally. On the operational optimization side, again, I mentioned what we've done to turn around and drive future exploration success by going back to geologic first principles, right? Good geoscience is what drives high quality exploration and discoveries. That work had not been done. We put it all together over the course of last year. I'll talk to you about what we did on that front. Most importantly, as a retail or any investor, right? I look at this company and I look at where can we trim the fat? Where can we cut waste? Right? This company had a $6 million G&A budget in 2022. We've brought that down to $2 million in a year, 67% reduction. That means more money is going in the ground. We've also made significant upgrades and improvements at site to make sure that a $400 per meter drill cost is now down to $250 to $300. It means more meters drilled, more opportunities to deliver value and returns to shareholders. And again, we've overhauled our management board and added strong advisors to help on the corporate governance and the growing of the deposit. So what are we trying to do? We're trying to take our 3 million ounces that we currently have at Douay and demonstrate the potential for 5 million across the entire property, right? While we're also taking the deposit that we have and de-risking it. Why do we trade at $4 US per ounce when the gold price is at 2,700? Nobody understands. Yes, it's pit constrained. Yes, it was using conservative estimates. Yes, Agnico participated in that resource estimate. Yes, it was done in 2022. The gold price was at $1,800. Today, it's at 27. What people want to understand is, when is it going to be a mine? How much of it's actually going to be economic, right? So what we're doing to de-risk the deposit over the next year, while we're also doing discovery drilling, that's going to be our re-rate, right? If we trade at the peer group average we trade at $4 an ounce. If we trade at the peer group exploration development company average of $8 an ounce, the share price is a double from where it is today, right? And that's with just doing good, strong de-risking and absent anything else that's going on in the market. Our fully funded resource exploration, resource expansion and discovery drill program is coming up. We expect drills to be turning in the next couple of weeks, right? As soon as the ground freezes in Quebec, that's go time for us. It lasts usually between January and the end of March. The climate's obviously changing. It's been warm the last couple of winters in northern Quebec and Ontario. We have permit applications have already been filed. I'm traveling up there next week to meet with the team, our First Nations partners, but we're really focused on strategic infill at Douay, focusing particularly on high-grade zones, stepping out from Douay and Joutel, new discoveries, and focusing on the 55 kilometers of strike length that we have in the Casa Berardi, which is ripe for exploration and discovery. A little bit about our partnership with Agnico Eagle. I think most of you know Agnico Eagle, or at least heard of Agnico Eagle. They're an amazing company, right? They bootstrapped, they've built great operation. They're cash flowing as of their last earnings, $600 million a quarter in free cash flow. Why? Because they have long life, high quality, high margin assets, largely focused in this part of the world in the Abitibi. The Detour mine, the Canadian Malartic mine, and the Macassa mine. That's a triangle right in the middle of which sits our assets, right? So there is strong strategic interest in Agnico in these projects. What we did with Agnico, we had a joint venture with them from 2021 until this last couple of months. We restructured that deal to gain 1.5 million ounces and 100% ownership, which gives us a clear path to advance the assets, right? The joint venture structure we have with them at 50-50, in February of 2025, we would have been forced to, if they had decided to put a $10 million exploration program or a $20 million exploration program together, we would have been forced to come up with 50% of that, regardless of what's happening in the market, regardless of what's happening to our share price. If we were able to raise the money, it's dilution to shareholders. If we couldn't come up with the money, it's dilution at the project level. So this is a smart, again, I am a geological engineer, but I'm also an investment banker. And putting a proper structure, deal structure in place, before we even start drilling, the structure has to be there, right? So this deal gives us the clear path to advance the asset on our own, but it still gives Agnico lots of exposure to the asset, which is what they want, right? So their strategic interest is via their NSR and via a back-end, which basically gets them right back to the 50-50 JV that we had originally, just based on milestones that actually move the needle. And those milestones include a pre-feasibility study, feasibility study with economics on the asset that demonstrated $300 million NPV. That begins to be relevant for a company like Agnico that's looking for a long life asset, but something that's got actual cash flow, a cash flow profile and production pathway. Agnico is part of that transaction. I also asked Agnico to step in and increase their equity ownership position in Maple. It's strong validation for us. Our stock is trading today at 5.5 cents. Okay, at the time we did this deal with Agnico, our stock was trading at 6. I got Agnico to come in and invest in the company at a back end price of 8.5, which is a 42% premium to our reference price of 6, and we raised that money at 12. This is a smart transaction. We're not raising those funds at a discount to market. We raised them at a premium and a significant one. How did we do it? We have the strong backing of a partner who doesn't have to. They're not forced to invest in companies at a premium, right? It's a fundamental belief in the potential not only of the project, but it's a belief in the company and the management and the overhaul that we've done over the course of last year. So if you look at our current market cap today, it's roughly 27 million Canadian. Agnico's total investment in Maple Gold is 25. They spent $12 million in the ground over the last 4 years, and they've spent $13 million in the equity investments in Maple Gold. You can buy the stock today at 5.5. You can buy it for 3 cents cheaper than Agnico did in July, right? Why is that? Tax loss selling, market malaise, you name it. But the fundamental investor who believes in the potential of this asset, including us, we're all there, including myself as a shareholder. These are just pictures of them. They're at site. They're strong technical partners as well. They're not a parent we look to for dollars. We look to them for technical support, and they've been fantastic. Just a little bit about where we are. There are 3 principal gold-bearing structures in the Abitibi that are hosting world-class deposits. There are some parallels of what we have at Eagle, Telbel, Douay, and Jutel to some of the bigger producing mines in the region. Those include Agnico assets such as Detour, such as Canadian Malartic and Macassa, and Hecla's Casa Berardi mine, which is located right on our mine trend. This is our structure right here in the middle of the Abitibi. It's the Casa Berardi Deformation Zone. To the north is the Sunday Lake Detour Deformation Zone, and to the south is the Cadillac Larder Lake Deformation Zone. Lots of discoveries, 200 million ounces plus through this entire region. This is probably the least explored. When the smart geologists at Agnico, Paul Harvich is on our advisory board, they look at this asset. When I looked at this and did my technical due diligence on the asset, we saw all the same things. Fraction of the drilling of some of these mega deposits, big geochemical anomalies, big geophysical anomalies, parallel alignment, mantle tapping deep structures. Again, I'm not going to make people's eyes water about geology, but there's a deep plumbing source that's creating 3 million ounces that's sitting at or near surface, right? So we have all the geologic characteristics that are signatures of the biggest gold deposits that are at major scale structures within the Abitibi, but with a fraction of the drilling. Our average depth of drilling here is 350 meters. You have mines in this region that are operating at 2,000 meters. There's a lot of green space and a lot of potential to make new discoveries. This is a snapshot of what we are and what we have as a combined property package. This is our 400 square kilometer land package. Everything in this upper portion here, this is our Douay project. Everything in this lower corner here, this is the Jutel project, which was contributed by Agnico. The resource, which is 3 million ounces, sits on this portion where all the red stars are. So it is a bit of a postage stamp size of the overall land package. The former past producing high-grade Jutel mine complex sits right here on the Jutel project. So you can see there's a lot of upside potential. There's mines to the west of us, mines to the east of us, clowns to the left of us, jokers to the right, etc. But there is a lot to be discovered here. We're obviously focusing on return on investment of every exploration dollar that goes in. So we've got an approach that is what's going to add the most value in the near term, focusing on driving reserves, focusing on the near resource expansion of existing mineral resources, advancing targets that we've vetted from a geological, geophysical, geochemical, and mapping perspective, and then looking at some of these greenfield targets for upside discovery potential. Excuse me. Zooming in on the Douay deposit, again, this is a completely redone geologic map that's based on 30,000 meters of relogged core. We have 250,000 meters of drill core on our site. If you look at an average drill cost in the area of $300 per meter, that's about $75 million worth of replacement cost right there. I'm giving you some numbers to just put our $27 million market cap current into context. We have multiple styles of mineralization on a single land package. That's also a hallmark of world-class deposits. We've got a major structure in the Casa Berardi here that is creating some of this optimal circumstances for gold emplacement. And it's an extensive gold deposit. It's a 6-kilometer strike length from Douay, the Douay Northwest all the way down to the 531 zone. This is 6 kilometers in strike, and the width is approximately 2. If it all became an open pit mine, it'd be one of the largest open pit mines in Canada. And we'll talk about development scenarios here as we move on. Just to point out, one of the also important things about Douay is these yellow outlines are the pits that are constraining the 3 million ounce resource. Normally, when you look at a stock screen, when you look at your screen, green is good, right? Red is bad. On this screen, green is also good. Green is every intercept that we've hit on the site that's above 1 gram. But on this screen, red is excellent. Red is every intercept that we've encountered on this deposit that's greater than 10 grams per ton. This is not a homogeneous 1 gram per ton typical Abitibi deposit. There are high-grade components in Douay West, in 531, in the main zone, and within the Porphyry zone and Northwest. Those are the areas from a return on investment standpoint, those are the areas that we're focusing on. We're not just expanding low-quality ounces. We're looking for high-quality, high-grade ounces, even within the Douay, existing Douay pits. This is an oblique view that shows you what the pits look like. Again, this is a large complex of from northwest to southeast. This is your 6 kilometers, here's your scale bar for reference. Most of the indicated resources sitting in Douay West, this is the 500,000 ounces of 10 million tons at 1.6. The inferred is 76 million tons at 1.02. So it's just over a gram in overall with 3 million ounces in total, and it's contained within multiple pits. What the company had done previously is they had tested some deep potential with some 2,000 meter holes. Each one of those holes cost $800,000 a piece. Yes, it's great when you have Agnico funding those things, but this is not the kind of drilling that we're going to be doing. There's a lot of white space to be sketched in, including a development scenario for this well-known, well-defined. Also, everything here that's in pink is potential underground material. Everything that's in sort of hot colors, those indicate the potential for high grade within the Douay system. Those are the areas that we're going to be focused on. Why is Agnico interested in this, and what do we see the ultimate long-term potential of this thing is? This is the analogy between us and Canadian Malartic. There are geologic analogies. There are lessons learned from Agnico, even the discovery of some of their underground. They've now moved from this open pit. This was Canada's largest open pit mine. They had to move an entire town to build it. They discovered underground resources here at between 2.5 to 4 grams. Obviously at Odyssey, they've got 2 million ounces. They've got 8.7. The PDAC award was just given to the discovery team that made this discovery in 2018, and 5.2 million in East Malartic. They've transitioned to underground. That same potential exists here. When I mentioned that our average drill depth is roughly 350 meters, all of the stuff that sits between here and some of the analogous deposits in the Abitibi, this is all open space, right? This is open and ripe for testing the plumbing system. This gold did not just exist at surface because it was sprinkled from the sky. It came from a deep plumbing source. This is the analogy that we're working on. This is why Agnico believes that there's potential for something much bigger. At Douay, we're focused on some key areas. I mentioned the high grade. Douay West is one of them. If we find, for example, from a development standpoint, if we grow this 500,000 ounces to something that looks more like 750 or a million, maybe it doesn't move the needle for an Agnico. It certainly moves the needle for a company like Maple Gold, right? So if we focus on these areas and adding ounces, obviously this is double the average deposit grade at 2 grams. There are lots of open areas. This comes from the relogging effort that we've done, but coming up with a proper interpretation of what's producing this on the distal end of the deposit. Interestingly enough, on the opposite end of that deposit at 531 zone, you also see high grade. You see 3 times, it's treble the average grade of the deposit, right? What's producing this high grade on either side? And where are the potential for us to expand both at depth and along strike? It's a structural interpretation, right? This is the Casa Berardi North Fault. This is the first time that anybody's actually done a proper structural interpretation of this deposit. Strike slip motion with pressure shadows on either side of a rotated intrusive block, and these pressure shadows are opening, widening zones that allow for hydrothermal fluid emplacement. They correspond roughly to Douay West and to 531. Agnico saw this for the first time in August. They love it. This is a concept that we're going to be following up on with the next drill program. Same thing with putting the lithogeochem together. Nobody had ever done this, right? If you don't put it on a map, you don't look at it, as Gerald Riveren, one of our directors, our head of our technical committee, says, you can amass all this data until you actually put it on a map and you start looking at what are the trends. Here, obviously, the broad trends, green rocks are basalts, red rocks are cyanites and intrusives. There's a clear difference between the kind of mineralization that we see here versus here, okay? So these are the things that we're actually focused on with our programs: better structural interpretations, better geochemistry, better understanding of the growth of the intrusive complex, which allows us to target better going into 2025. These are the focal areas that we're going to be focused on over the next drill program. Obviously, it's focused on resource expansion and expanding the deposit from 3 million to 5 million ounces, starting with the northern portions of the porphyry main zone and 531 zone, and moving to some of these areas in the Douay West and Southwest and some of the greenfield targets that we have at Douay. Just quickly on Agnico and the Eagle mine, this was a picture of what Eagle was before Agnico acquired it. Agnico was a silver, nickel, cobalt mine until they acquired Eagle. They did this in 1972. They operated this mine for 21 years, produced 1 million ounces at 6.5 grams. This is what they left behind. Everything that's in gray was the mine ounce, right? They mined everything that was above 10 grams and left everything else behind, right? This is all because it's never really seen systematic exploration since 1993. You can see what it will do from a $300 gold price when they shut it down to 2,700. There's a lot of potential for a restart, including some of these holes that are up here near surface. 7.9 meters of 20 grams, 7.8 meters of 10 grams. This is significant, right? This is all high-grade gold. This is a little bit different from what we see at Douay. Just to summarize what our next program, which is fully funded, which is starting in the next couple of weeks, it's 10,000 meters minimum of drilling, testing areas within the inferred resource area to convert to indicated, stepping out along strike, stepping out from high-grade gold mineralization, focusing on high-grade gold mineralization, new discovery targets, particularly focused on 531, main zone, central zone, and porphyry. And at Jutel, it's starting to systematically test the potential for a restart with a high-grade sweetener to support a mine plan. Just a quick snapshot of what you see when you come to site. We've got a head frame there. Obviously, Orezon built that in 1997 because they felt that there was a mine here. There's a 30-meter shaft that was looking like the first place to mine would likely be Douay West. This sits near the Douay West deposit. Our camp and our project sit here. This is the office. This is where 250,000 meters of drill core are set up. Mine drive, full-service 46-person camp, core logging facility. So again, excellent infrastructure. Team, quickly, everyone that's in green, this is a team that we've been at it. It's a team that's been at it over the course of last year. New CFO, new VP Technical Services. I've obviously been with the company since 2021, but as CEO for the last year. New director in Darwin Green. Paul Harbage is a technical advisor. Lots of large company experience, including Wheaton, Inmet, Goldcorp, High Gold, etc. Briefly on our capital structure, 454 out, 496 fully diluted, high low of 5 to 9, market cap 27, trade about 256,000 shares a day with 10 million in the bank, and that's just on the TSX Venture, I should say, the volume. We're covered currently by Michael Gray, Lauren McConnell, and of course Mark Reichman, who does an amazing job. Our current shareholder base is 23.6% institutional. These are some of the institutions. You know a couple of these names: Fidelity, US Global, Quebec Funds, Agnico Eagle at 16.4, individuals, including myself, with over 2 million at 1.3, and the rest of it is retail. So just to summarize, it's a pure Canadian gold play, great jurisdiction. We've got 3 million ounces of established gold, high-grade past-producing mine trend that's ripe for exploration and restart potential, large land package, great partnership with Agnico Eagle, excellent management team, focused on return on investment, allocating capital properly, reducing capital costs, etc. We have 10 million bucks. We're fully funded for the next 12 to 18 months. We've got an organic growth pipeline that's fully funded with lots of discovery potential, and all of this is for a current price of $4 US per ounce. I think it's a compelling value opportunity, and with that, I'll turn it over for a few minutes if there are any questions. Thank you very much.
With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple, then Channel Check truly is your trade. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series luncheons, and to be part of the preeminent annual Small and Micro-Cap Investor Conference, NobleCon. And here's the best news. Since Channel Check is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channel Check is North America's leading source of research on the companies that just may change the world.